Hi guys, welcome to another video. In this video, I'm going to show you guys the most simple trading strategy in the whole world. This trading strategy is a very simple pure price actions trading strategy. It doesn't use any indicator. And then this trading strategy has a win rate of about 70%. So it means that if you take 10 trades with this strategy, you're most likely going to win 7 trades out of the 10 strategies. So I call this strategy the sweep shift entry strategy, the sweep shift entry strategy, or the H4 time frame strategy, right? Because with this strategy, the H4 time frame is one of the key determinants of what we're going to do trading this strategy. So how we're going to do this is I'm going to explain what the strategy entails. And after I explain it to you guys, then I'm going to show you guys examples. We're going to look for examples together on the chart using this strategy. So let's dive right into it. This strategy entails very, very basic stuff. The most basic of technical analysis, the most basic of technical analysis. That's what this strategy is all about. So in this strategy, we're going to be looking at the market structure. We're going to also be looking at order flow. For you to trade this strategy properly, you need to have a very good understanding of basic, pure price action. You need to have a very solid understanding of the most basic of technical analysis, price action, and all of that. So you need to understand market structure. You need to understand order flow. You need to understand liquidity concepts. You need to understand how to use the H4 candle, the H4 time frame. Then you also have to understand point of interest, which will serve as your entry, right? So let me explain this one after the other. The first one, market structure. What is market structure? Using this gold chart on the 4-hour time frame, let me explain what market structure is. Market structure is simply you just understand what the price is saying, by just taking a glance at the chart. You understanding what the chart, what the price is saying on the chart. So right now, this is good on the 4-hour time frame. By me looking at this chart, I can see that price is on an uptrend, right? Price is trending upward. So market structure helps you to understand what is going on the chart, right? The chart can only be doing either of these three things at a time. It can either be trending upwards, or it can be trending downwards, or it could just be in a range. So these are the three things that the market can be doing. It either is in a range like this right here. Let me draw out this range for you. It's either is in a range like this, or it's trending upwards, or it's trending downwards. So this is the range I'm drawing. So it either is in a range like this. So as you can see at this point right here, the market was just ranging, going up and down within, this rectangle, right? Then from this bottom, from this low, we see the price break out and just start moving upwards. So in this particular scenario, you will see the market is trending upwards, right? While in this place right here, you see that the market is ranging. So the market can either be trending upwards, can be trending downwards, or is ranging, right? So that is the market structure side of things. You understanding what the market is doing, what price is doing at a particular time. Is the price trending upwards, or is the price trending downwards, or is the price ranging? These three things is simply what market structure is. So if a price is trending upwards, that's when you say that the price is creating higher highs and higher lows, right? So this is a low, this is a high, right? Price has printed a higher high right here. This is it. Let's use this for example. This is the high, this is the low. Price printed a higher high right here, printed a higher low right here, printed a higher high right here, printed a higher low right here. So this is what you use to determine when price is in an uptrend and the opposite for downtrend. So I'm not really going to talk too much on this. I just want to give you guys like a brief, explanation of the basics of the strategy. So that is it for market structure. Then for order flow, you want to understand what is going on in a particular, range or trend of the market. If the market is trending upwards, you want to understand whether at this particular, time, what is the order flow? Are we having, more demand zones respected, or are we having more supply zones respected? So let's say in this whole area right here, what has been happening? Are we seeing more of demand zones holding and breaking supplies to create a new high, or are we seeing any supply zone holding? You get, so at even in the uptrend, you want to know what the order flow is. You want to know what particular type of orders are having more dominance in a particular time of price, right? So that is what order flow is. Then liquidity concept. Liquidity concept, I'm also going to make another extended video on liquidity concept because I believe if you're new to liquidity concepts, you will need a more, lengthy video to understand what liquidity concepts are. But liquidity concepts are liquidity generally is what moves price, right? Liquidity is more like the fuel that moves price. It's more like the diesel, the energy that drives price. So if price needs to go up, it will most likely come down, take out some liquidity before it moves up, right? So that is just in the most basic of forms. That is what liquidity concepts are. That's what liquidity is. Now, let me just give you a quick example. Now, look here. We have price come down here. Take out this low, right? Take out this low before it started to push up to the upside. So this low right here is a liquidity. Price came, cleared out the liquidity, and it got more, energy to push to the upside. So that is what liquidity concepts are. There are different types of liquidity. There are, wicks like this that serves as liquidity. We also have trend line liquidity. We have equal top, equal bottoms liquidity, and all of that. So I hope you got what I mean by liquidity in this very short explanation. So liquidity is the energy that pushes price. Price will usually come and take out liquidity before it goes in the opposite direction, right? So this liquidity grab is also a form of, trapping sellers before price moves up, right? So that's liquidity. Then we now have the H4 candle. The H4 candle is very, very key in this trading strategy. The H4 candle helps you to know, helps to tell you what you should be doing next. So the H4 candle will tell you whether you should be buying or you should be selling, right? When we start looking at examples, I'm going to explain further how you will use the H4 candle to know when to buy or sell. Then point of interest. Point of interest is where you will be looking to take your entry on this strategy, right? Point of interest will be an OB, another block, or a liquidity sweep on the lower time frame, or a candlestick pattern that printed on the lower time frame that you're going to use as where you should take your entry with this strategy. So that is what the POI means. So this strategy is the sweep. I call it the sweep, the shift, and then entry strategy. Let me type it right here. Let me show you what this strategy is all about. So I call this strategy the sweep, call it the sweep, then the shift, then the entry, right? So this is what this strategy is all about. Now, this strategy is so simple that the only thing you need to look for are these three things. You want to wait to see that the market gives you a liquidity sweep. Then the next thing you also want to see is a shift in market structure. Then you're going to start looking for your entry. This is what the strategy is all about. A sweep, a liquidity sweep in the market. Then we have a shift or a change of character, if you want to call it that, then an entry. This is what the strategy entails. Now, let's look for live examples. Let me show you how you can use these simple things I've explained right here to trade this strategy that gives you over 70%, win rates. Now, this strategy, you need to first of all understand the market structure. What is the market doing, right? Is the market going up or is the market going down? Now, using gold for as an example, you can see that gold has been trending upwards. So in this kind of situation, we want to be looking for a buy scenario, right? We want to be buying gold because we understand that the gold has been very bullish. So I will only be looking to see that the market comes and gives me a sweep of liquidity, just in this case right here. If the market gives me a sweep of liquidity, then I want to see the market give me a change or a shift in market structure. Then I'll look to enter on a POI. Now, using this particular trade right here, we can see that the market came down here and took out these lows. So you're going to call this a sweep, right? This is going to be a sweep. I'm going to label this as a sweep. So this is a sweep of liquidity, right? After the market took out this liquidity, we saw the market range, then it gave us a huge push to the upside, which is the shift in market structure. So right here, we got a shift in market structure. So we're going to label this as shift. So upon having this shift now, the next thing you're going to do is to look for a point of interest for you to take your entry. So, and I told you that this point of interest can be either another block, or it can be a demand zone or a supply zone, or it can be a candlestick pattern that helps you to identify where your entry should be. Now, on this particular example, we have another block right here. This is the last bearish candle before the bullish candle that gave this break or shift in market structure, right? So this right here is the other block. Let me draw it out. So this right here is the other block. Now, the thing is, if you were looking at holding this other block, you will most likely not get this entry on this particular trade. So if you didn't get this entry on this particular trade because you used the other block, fine, well, you look for the next trade, no hard feelings. But then another thing you can do is to mark out this particular area here as a breaker block in general, right? So if you marked here as the breaker block or an area of demand, right? You can draw this out as an area of demand that you want to use as your point of interest. You see, you will have been able to get in on this trade, right? So let me just delete this and let's work on this whole area of demand right here. So if you use this area of demand, you will actually be able to catch this trade because your entry will be here, your TP will be above, and then your stop loss will just be below this candle. So you see that if you had done this, you will have caught a nice 1 to 5 hour with this strategy. Now, this is just what the strategy entails. The sweep, the shift, the entry. The sweep, the shift, the entry. And you need to use the 4-hour time frame. Now, why is it important for you to use the 4-hour time frame to take this trade? It's because the 4-hour time frame is more solid. 4-hour time frame means that the 4-hour time frame means that the market has taken up to 4 hours before it printed a candle. So all of the, the all the fights between the buyers and the sellers, at the end of the day, after the 4-hour candle has closed, right? After the 4-hour candle has closed, whatever the 4-hour candle close gives, that tells you who won the battle. If it gives us a bullish engulfing candle, it means that there were more bulls in that market. So I'm willing to buy, right? If it gives us a bearish engulfing candle, it means that, let's say for instance, right here now, you see that this is a bullish engulfing candle right here, right? So this is what is going to make you more interested in, looking for buys. Now, this is what is going to make you more interested in looking for buys. Let me show you something. You see what I just explained right here? You will have actually taken this trade even from this candle right here. Even from this candle right here, because this is another shift right here, right? This candle is a 4-hour candle that was bullish and I was engulfing, and it also gave us a shift in market structure right here. So you could have even gone down to the lower time frame to look for, point of interest to enter from, even on this candle right here. Now, let me look for another example and show you guys. Let me look for another example to show you guys. So, another example is right here, right? We know that the market has been very bullish, right? The next thing you want to wait for is to see that you have a liquidity sweep. Even though I know when we go down to the lower time frames, you are going to see a liquidity, either a wick or some form of liquidity right here. So you see this wick here, it has come and taken out some liquidity right here. And after this liquidity sweep, we now have a strong bullish engulfing candle right here that has probably given us a shift in market structure to the downside. Where are we, right? This is not a very solid example, so let's just move and look for another one. Let's look for another one before I show you another example on 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 Euro USD. On Euro USD. Okay, so this right here is also another example where you will have capitalized on this trading strategy, right? So let me show you. We had some liquidity right here. Price came and swept the liquidity, took out this liquidity here, right? And this is another block. I'm sorry, this is an area of demand, because market has been going, up. So you can also mark out horizontal levels on your chart to give you, you know, areas of support and resistance that you will use to mark your entry. Now, let's just mark out some areas of support, right? So, of course, you need to also have a basic understanding of support and resistance, right? So, these are areas of support, right? Market, it was acting as resistance here. Price broke it to the upside, came down, acted as support here, came and kind of tested it again, and then boom, went up. After that support, boom, went up, came back down, right? Now, this is another example. We had liquidity here. Price came and took it out, and also is respecting this area of support. And immediately after it took out this liquidity and respected this area of support and demand, we saw a very strong bullish H4 bullish engulfing candle. We saw a very strong H4 bullish engulfing candle. Now, this is what I'm talking about. You need to first of all allow price to play out. You need to see price give you some sort of liquidity sweep. Then you want to see that after the liquidity sweep, we have a very strong H4 engulfing candle. Why do we need to wait for H4 to give us a strong engulfing candle? Because that is going to be the confirmation that price is likely going to continue to buy. If this H4 candle doesn't give us a strong engulfing candle, that means we may still see price come all the way down here, right? But the reason why we're going to confidently go into this trade is because we see that H4 candle has closed and it is bullish, and it's even bullish engulfing. So it means that for the past 4 hours, right, the buyers have been trying, and they finally closed above the previous candle. So it means that we have more buyers in this situation. So this is what we're talking about. So this is what you're going to use as your basis for getting more confirmations that price will likely go continue to go up. Number one, we have a liquidity sweep. Number two, we have price come back to tap into this horizontal level of support. We also have price coming to this level of demand, right? Because this is the level of demand, because this is where we first saw buyers push price up, and now price has come back again, right? So once we've seen that, the next thing is for us to see a confirmation that price will continue to be bullish, of which is we're waiting to see a 4-hour candle close. Why I choose the 4-hour candle close is because 4-hour candle close tends to be more, respected. If you have a 1-hour candle close, if you're not lucky, that 1-hour candle close, even if it's bullish, you may still see the next few candles bearish. But you on 4 hours, if a 4-hour gives you a bullish engulfing candle, a bullish candle close, you're more likely going to see price continue to the upside, especially if you're looking at this candle close at key areas of support and resistance, at key areas after liquidity has been taken, right? So in this case right now, immediately you see the 4-hour candle close, the next thing you're going to do is to look for your point of interest. And looking for your point of interest, you're going to go down to the lower time frame. You're going to go down to 1 hour, you're going to go down to 30 minutes to look for your point of interest. So let's go down to 1 hour, right? Now, going down to 1 hour, this is how the 1 hour looks like. After you've gotten a very strong, 4-hour engulfing candle that has happened right here, you've now come down to look for a point of interest. Where will be your point of interest? Now, you can see this, pin bar like candle. This is one of the things that will make you want to buy at this point because of this candlestick here. So your point of interest, as I had mentioned earlier, can be different things. Where is this writing now? So your point of interest, uh, I'll find what I just wrote. Okay, here. The point of interest can either be another block, it can be a liquidity sweep on the lower time frame, it can be a candlestick pattern that has formed, it can be an area of demand, or whatever it is you find to be your point of interest, right? So in this particular case, coming down to the 1 hour time frame, we see an indecision candle lying down here carelessly. What are you gonna do? You're going to use this indecision candle as your point of interest. So you draw it out and then you buy. Place your buy limit here. If you like, you can put your stop loss below the candle or bring it all the way here and target above. So this will have given you 1 to 3 RR, right? A nice 1 to 3 RR on gold. So guys, this is it, man. This strategy works very, very well. This strategy works very, very well. Now, let me give you a last example on gold. Remember, I called it the sweep, the shift, the entry. Sweep meaning that you want to see price give you some sort of liquidity sweep, then you want to see it reacting off a level of support or resistance. You want to see a change of character. You may be wondering, where is the change of character on this in this particular example? This is it right here. All right, this is it right here. So if you want to level it, you're going to call this a shift, and then you call this a sweep, right? So that's it. Now let me show you something that happened today on Google. Today was CPI. CPI data was released today, and as you can see the crazy, movement that happened today over like 90 pips. This is 126 pips, but the crazy movement was about 113 pips, right? Now, let me show you something that happened and why this strategy is not something you should mess with. Now, check this out. This is Euro USD. Even though I was actually bullish on Euro USD, I was looking to buy Euro USD all the way to the top here. But then that was because I was already on GU longs. I was in profit. So I didn't really pay attention well to look at what was going on Euro USD. So I just, held my position on GU. Now, this is Euro USD, and I want to show you guys how this particular strategy played out very, very nice on Euro USD. Now, this is Euro USD. It has actually been on a downtrend for a while before it came back up and then took out some liquidity here. Now, first of all, I want to show you that we first took out liquidity here and we got a sell-off, right? We first took this liquidity here. After it took liquidity, we got a sell-off on the 4-hour, right? We got a sell-off on the 4-hour. Then you could have actually gotten an entry here because this is strip and this is the next candle was a bearish engulfing candle, right? This is a bearish engulfing candle showing that we have a lot of sellers in this market. So even from here, you can as well go down to the lower time frame after this 4-hour close, then you look for your entry, right? But my emphasis is not on this particular setup right here. My emphasis is on the next one. We still got another sweep right here. Got another sweep. So now this is another sweep. I'm gonna level it as sweep. So this is a liquidity sweep. After we got this liquidity sweep, see the next thing that happened. We got a very crazy bearish engulfing candle close on the 4 hour. So what does this now tell you? Seeing this very strong 4 hour bearish engulfing close, it now tells you that, oh my bro, it's time to look for sales in the market because we have the confirmation that the market is most likely going to continue selling, right? We have that confirmation. So the next thing you're going to do after this 4 hour engulfing close is to go down to the lower time frames to look for a POI, point of interest, where you're going to sell. So you go down to the 1 hour and start looking for where you're likely going to sell. Now, if you look at this 1 hour, what do we have that serves as point of interest? Number one, we have this other block right here, or supply area right here, because this is the first area that gives us this strong sell, right? We have this supply area. Number two, we have this breaker block right here. This is a breaker block right here, right? Let me go down to the 30-minute and see what the 30-minute looks like. Well, still the same thing. We have the breaker block. We have the area of supply right here. So what did price do? Price didn't come all the way to the area of supply, but it came into this breaker block and tapped it. And this breaker block happens to be aligning with the Asian high. This right here is an Asian high and low, tool that I use. So this breaker block happens to align perfectly with the Asian high. So price just came, took out the Asian high, tapped into the breaker block, and it sold off. So even if you sold from here and put your SL above, right, you will have still been able to catch this crazy CPI move, crazy CPI move. So guys, that's all for this. I hope with all the examples I've showed you, you kind of have an idea of this trading strategy. I'm still going to make a lot more videos on this strategy until you understand it, until you have it at the back of your mind, right? So I hope you got value from this. If you did, don't forget to like the video, hit the subscribe button because more strategies are coming your way. So cheers, guys, and see you guys in the next one.